the main issue here about prices or changes in price levels and rates of change, they relate to whether things are more expensive or less expensive. When the change is positive, that is if things grow by more than zero, above zero, it means they are getting more expensive. You pay more for the same unit at a later point in time than you pay it at this current time. So that's it. If they are negative, it means that the prices are getting lower. Now, in relation to a question as to what does this mean in terms of the changes in prices for exports and imports, what is clear is that the cost of imported goods that are placed in the manufacturing or are used in manufacturing other goods and services, those prices have dropped. And for this period, they dropped by 7.2%. It means that South Africans can buy these imported goods that they use in manufacturing at a much lower price. Whether they can sell them at a much higher price is another matter. But we see if it is for the same goods, the exports come at a reduced price, but not as reduced as the imports. The difference between that one, negative 1.2 and negative 7, is about 6 percentage points, which means then that's the production, what would you call it? In consumer terms, it would have been a consumer surplus equivalent if we were to talk about that. That's what the gain might be, but is it really a gain or not? It's another matter because there are other intervening factors. So what we are saying here in terms of changes in the prices in relation to imports and exports, the changes have been showing decline in prices, but the consumer, or rather producer price indices for the period under review grew positively, meaning that domestically produced things still meant that the prices were higher for the product, that sector of products, of manufactured products.
Yes. So the domestically ones were higher, but import-export was lower.
But they're not lower, but not because of their weight, relative weight in the basket, not to impact on the producer price index, which remained more expensive, or showed changes in prices that were higher.
And then obviously there are other factors that will come in before the CPI, then to the actual consumer price index.
Absolutely.
What kind of factors would be taken into account?
It depends what consumer goods are. What consumer goods are consumed. Yes, it's a tautology. What are the consumer goods that people consume? And the relative weight in the basket of consumer goods. For instance, if this affects food, and the cost is, the price changes are lower, it means the food prices may be lower. But that also depends on the behavior of retailers. I mean, earlier I was showing you concentrations. And when there are concentrations, it doesn't translate immediately into a reduction in prices. So a lot of transparency in the market is necessary for ensuring that the transmission mechanisms that occur from production to consumption are visible. And then that influences the markets to behave differently. So transparency is very important.